Good day, everybody. Brian here from where. Uh, okay, so probably the first big video for the year in 2024. Just wanted to let you know that last year, 2023, the trading entries were really good. The exits were the big problem for my whole trading accounts. So I've pretty well resolved that, I'm hoping now. Um, a lot of basically what happens is you put your entries on with automated trades, however it's done, TradingView, Python, whatever. And a lot of times the system, for whatever, it may not pick up the exit, or I don't know. It's just the exiting. I'm not 100% confident with right now. So what I've done is I've put together a bunch of Python scripts that will watch my open positions, both in the Kraken and interactive brokers for all the equity, stock, or ETF. And what it will do is once it hits a certain point where um, there's signs of weakness in the open price because everything's all trending, um, it will exit the trade automatically. Okay, so that it runs 24 hours automatically watching open positions. So that's for both crypto, Kraken exchange, and interactive brokers. So I'll be trying that out in the next week or so, seeing how that performs. And yeah, I might start showcasing the live trading account for that. Right now, market conditions do not look very healthy. For the first week of 2024, obviously there's losses. Um, I've shown a video on the overall different sectors in the markets. And if you watch that video, it's about half an hour, you'll clearly see that majority of sectors are negative performing. They've been like that since 2022, which was negative. And the only thing that's really performing is obviously the Magnificent Seven, the big tech, and that's the only real sector. There are other sectors that are beating the markets, but consistently for a long time was the Magnificent Seven. If you didn't have those Magnificent Seven, because they skew the markets, most likely you'd be losing money on all your portfolio, both on the bond and equity side. Just the way it is, it's not a very broad-based rally um, long term. And I just did another scan yesterday on Friday because today's the 6th of January, Saturday. And majority of, and remember, I'm tracking 64 sectors. So out of that, you might have 10% that are profitable and they're not strong profitable. So this is where we're at. I think quite likely we're going to hit some kind of catalyst, what we had in um, March of last year when we had three banks go bankrupt and people could have lost their entire savings. Um, Everything's hocus pocus right now in the US. The things to watch for are the treasuries. I learned this from Daniela Booth, and who was a Fed insider. And what you need to watch for before things break, and it's very predictable. And when things broke in March, this trend started showing up in February. So basically, what it is, you watch the short-term treasury spread of, let's say, uh, 4 or 5%. As I said before, we're on the cusp of 4% across all the major treasury durations. You have your short term, and then you have a long term, let's say 30-year. They're supposed to be tight and very tight and stable. But because of the debt situation in the US, it distorts everything. So when the short term, let's say 2 year, maybe 5 year, uh, and the 30 years start to diverge and not stay stable, that's when you start to see things break. So they start to diverge farther apart, um, then that's when things will start to break. So I think that's what's going to be the catalyst to watch. And I don't care what people say. It's been proven. You just take a look at the charts on those durations of the treasury and the treasury spread over those two durations. You'll see what I mean. And go back to this time last year, between that and April, and you'll see how things diverge and the banks broke. So the Fed will try to do whatever they can, uh, but it's a very precarious situation. I think they will not be able to really stop anything because they're basically in the forefront of basically a dam, and the dam's starting to show holes of negative pressure of water busting down that dam, and that's where we're at right now. And I think over time that dam's going to bust, and the Fed will not be able to do anything about it. I put out alerts about it. Most people don't care about what's being said. And as I said, what the results are going to be, if it happens, it's going to be very catastrophic for a lot of people. So that's the thing you got to watch for. In my case, I've got everything pretty well automated now on the exit side as well. And that's the key. The entries is not a problem. It's the entries timing are important, but the exits on your open positions what matters as well. So that's fully automated. Um, so if you want to know more, the quant leap may be the only option available moving forward, and that's going to be 997. So if people want to take advantage, great. If not, good luck to you. And we'll leave it at that. And I don't know what more to tell you. Okay. So that's the stance the new website should hopefully be coming, but be forewarned, I'll be scaling back a lot of what I put out over and out.